The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got markets in positive territory to kick things off. Quite the acceleration the last couple of days. You back things up, man. You're talking about a SPY. You're talking about an S&P trading higher by about 100 points over the last 48 hours or so. You back it up to Wednesday. We're trading at about 41.26. This morning, we're trading at 42.26. Quite the acceleration to the upside. We're pushing pre-market highs as we speak right now. And we jump over to the indices as you have. The S&P's up by about 0.3% right now. You got the NASDAQ 100. Talk about a strong day for the NASDAQ yesterday, right? NASDAQ 100 up by 22. You get the Dow up by 86 this morning. And you have the Russell up by 6. Crude oil catching a bid. Up $1.39, trading at 73.32. Excuse me, jump over to gold contract. Talk about some volatility for gold in the last week, man. You back things up a week ago last Wednesday. You're at 2,050. Yesterday, you're almost at 19.50. Gold up $4 on the session right now at 19.64. We jump to silver, up by 21 pennies at 23.84. Notes and bonds. Interesting what we got going on here. Okay, so what do we have? We have lower price. You got higher yield. You jump to the dollar index. Dollar index actually pulling back. It's been on quite a run from about 103 to, from 101 to 103.60 yesterday. We're pulling back a bit off 32 ticks. It's not stopping yields, though. It's interesting how some days you have lower yield. Some days you have higher yield, which is what we've had since last Wednesday, right? You get lower price, higher yield. We got the 10-year right now at 3.7. 3.7, the yield on the 10-year. So some days you have higher yield and a higher dollar, which will be chasing that yield, right? That makes sense. You got higher yields. You're going to need dollars to chase that yield. And some days you get higher yield, you get a weaker dollar. We'll see if it holds. We're getting a little bit of a pop this morning on the dollar at 103.26 from 103.10, but nonetheless, we're talking about a 10-year at 3.7%. All right, jumping around to some of the equities making news this morning, and we'll kick it off with Morgan Stanley as their CEO is going to be stepping down sometime in the next 12 months. That news out just this morning. You see the volatility spike on that announcement. Not necessarily talking about who will be next in that helm, but making some headlines this morning. Gorman to step down within 12 months. And yeah, he's been there a while. The CEO for the last 13 years. Said in January there are 3 finalists to take over as CEO when he leaves, but the successor has not been named yet. And nonetheless, he's had quite a role there. And yeah, so the market reacts down a little bit on that news, but nonetheless, we go forward. Other news out this morning. Yeah, how about that one? Foot Locker, man. Be careful on this equity. Foot Locker drops 25% after a big earnings miss. That news just out. They don't even have it populated yet. Yeah, check it out, though. Foot Locker. There you go. Quite a drop-off, man. 25% to a drop-off. Not even sure what the news is, but it's not going to be good, man. Yeah, they lowered the comp sales guidance. Wow. So Foot Locker lowered, there's probably a million headlines because it's just a disaster when you're down 25%. You take a look at this thing longer term. So you're going to spike to $31 right now in the open. That's going to push you around to the lows of all of last year. You make it to 23, but this thing chopped around $30 for a while. I see one headline out here that they're lowering the 2023 comp sales guidance from down 3.5 to 5% to down anywhere from 7.5 to 9%. Their earnings of 70 cents missed the estimate of 81. Comp store sales decreased 9.1% versus last year. Yeah, just a disaster across the board, man. So they have $313 million in cash and equivalents as of April 29th. Inventories, $1.76 billion, a 25% year-over-year increase. They're still paying a dividend, huh? I'm not sure that makes sense. Yeah, nonetheless, be careful, man, because it's a tough environment. I mean, Nike has made the transition well where they can serve consumers direct. Nike's going to be down $3 probably on those numbers this morning. You're at 118. You're trading at 115 on those numbers. Yeah, there's your drop off on Foot Locker numbers this morning. For Nike, down to 115 as we get the market rocking higher. Absolutely remarkable, this market, man. So we check out this market. I mean, you're going to be above any high that we've seen in the S&P, folks, since you back things up to August of last year, right? You're talking about highs of 42.08. You're talking about highs of 42.06. We're 0.5% above those price levels. Quite the acceleration on a weekly basis, right? You look at that weekly bar. Let me just zoom in on the action here. We'll take off the Fibonacci's for some ease. I mean, that's quite a bar to break out of this area, man. The only thing in its way is the high from last October of 43.27 is the next high. Interesting, as we get Chairman Powell speaking today at 11 a.m. Eastern time. Yeah. We'll dig more into those Foot Locker numbers because I imagine they're in trouble, man. They're in trouble for sure. All right, equities not in trouble. The FANG stocks, folks. Let's check them out. Apple shares up another $1 today. I mean, look at this break, man, right? Decisive break from where this thing potentially had some resistance, well above that price level. You're talking about Apple pushing practically all-time highs right now. You jump over to the Analyze tab. I was talking to my dad yesterday, just these companies. Apple pushing $2.8 trillion. How about the surge in Microsoft, man? Microsoft now at pushing almost $2.4 trillion. What are we at? $2.36 trillion. Apple, Microsoft. They're in a race, man. They might be coming for Apple shares depending on how things go. And I'm not sure if you saw, folks, yesterday, but ChatGPT launched an app in the App Store for Apple, at least. I'm sure maybe it's in Google as well. I'm not sure. I'll find the article. My dad was texting me last night. And yeah, Google's got a problem, man. Now, so I now have the ChatGPT app on my phone. It's as simple as clicking it. You enter Q. You can talk to the app. It does not talk back to you. Okay, it spits it out in text. But you can open the app, open the microphone, talk to it. It spits it back to you. It's now on your phone versus being on a computer. Mobile is everything these days. And you think about the easy use. The one thing that's not quite there yet, okay, and I bet this is coming, man, because you know Microsoft wants this right now, is the current up-to-date, right? So you ask it. I think it would be either OpenAI or ChatGPT, and I'll check it out in a moment. Let's just see as we come into this break. Yeah, I think it's going to be OpenAI. Oh, no, ChatGPT. Yes, search ChatGPT app for iOS, because I think that's it. Let's see if this is. Yeah, here we go. So this is their tweet. When did this come out? So this is yesterday at 1 o'clock, so it took a little time. ChatGPT app for iOS. So, of course, it comes out for Apple first. Introducing ChatGPT app for iOS. We're live in the U.S. We'll expand additional countries in the coming weeks. Android is next. And I'd get in there and get it, folks, because sometimes they have such demand here, and I don't imagine they're going to scale things back. That's what the $10 billion that they got from Microsoft was for. But, yeah, it's Google's got some heat, man. The chart doesn't show it recently with FANG stocks accelerating, but look at Google compared to the highs, and then we'll take a look at Apple versus their highs. Google well off of the highs versus Apple and Microsoft. Stay tuned, folks. Big day in the markets. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up by about 12 right now, trading at 42.23. And quite the market that we got going on, especially when you look at the NASDAQ 100, right? You take a look at this thing, man. You look at where we kicked off the year, 11,000. Where are we right now? 14,000. You're talking about almost a 30% pop. And yeah, I would agree, Jimmy. They're talking about the den, man, saying, market's up so much, right? And this is where people are getting bullish. I'd be careful, folks. We heard some Fed speak yesterday. Pretty surprised at how this market has been so resilient in the face of continuing inflation, in the face of a Fed that's hiked 10 straight times. And we're not quite out of the woods yet when we got core inflation at 5.5%, folks. I'd keep it in mind, okay? Core CPI, 5.5%. We're on the 10th straight hike. And now, guess what? June meeting's live, man, period. End of the story, okay? It's live. I'm not sure what's happening, but right now the odds are what, 40% as of yesterday? Something like that in terms of a hike. And that meeting takes place, about 3 weeks from when we come back. Almost less than a month. June 13th and 14th is the next Fed meeting. We get a lot of data for the month of May prior to that. So it's going to be a little bit of a volatility. We're coming into summer trading, so that's always interesting as well. We jump over to the VIX this morning. 1594. How about a 15 handle for you? Pretty interesting as we get some Fed speak coming up from the chairman himself. I mean, can you square that one, folks? If you told people that the VIX was at 18 and change at the end of Tuesday, right, and that we were going to have Fed governors coming out and saying, guess what, we're not quite there yet, maybe we got a hike, et cetera, nonetheless, what do we got? We got a VIX under 16 right now. All things considered, very low volatility, man. We haven't seen volatility like this since almost pre-pandemic levels. You back it up to a 5-year weekly. There's your pandemic acceleration. Yeah, and we're at the doldrums of volatility premium right now at 1594 as this market just finds bids wherever it goes. All right, what are we talking about? Let's talk about a little Disney, man. So Disney kicks back yesterday, and yeah, the battle is on, man. And as somebody living in Florida, folks, it is a bummer, period, okay? Disney scraps the plans for a $900 million Florida campus, closes the Star Wars Adventure Hotel. Now, there's two things going on here, okay? You got Iger in there replacing Chapman. Okay, Iger was not as big of a plan for this Florida campus as Chapman was. This brings the Disney imagination or Imagineers, whatever it is going on there. to Florida versus keeping them in California. But it's a bummer, folks, okay? You're talking about a $900 million office park. You're talking about 2,000 employees. The average pay for those 2,000 employees was going to be six figures, okay? You do the trickle down on the economy, it's a big number. And then you look at the fact of the projects going forward. I think they have something like $15 to $17 billion in capital spend in Florida for parks expansion over the next decade. Let me see if they put it in here, because they do talk about that, and they do talk about that they want that to happen. But yeah, when you're getting an onslaught from the government, man, and there it is. They plan to invest $17 billion in Florida over the next decade and create 13,000 new jobs. But yeah, they're getting attacked by the governor, man, and it's a bummer. Okay, we'll leave it at that. It's a bummer. It's going to impact our economy, the state taxes that they pay. There's a reason why Florida, we got no state income tax, folks. Disney is a big part of that. I mean, that's the truth, okay? Disney is a big part of Florida having no state income tax. We got a lot of tourism dollars, okay? A lot of tourism dollars go everywhere, not just Orlando. But yeah, as you know, that's a big one. And boy, that Star Wars hotel, man, I was looking it up. For a party of four, $6,000. Better be quite a hotel room in Star Wars. Not sure I'd be willing to spend $6,000 for a simple hotel room. You can get quite the experience for $6,000. But nonetheless, the Lake Nona campus, they announced it 2 years ago, and yeah, it's not happening. There's $1 billion that's not getting put into the state. There's 2,000 jobs that aren't getting created that would have had a pay of six figures. And yeah, these are real-world consequences, man. So it's a bummer. You got Disney. I think that was probably some of the reaction yesterday with the market. Nonetheless, Disney shares trading at 93.76 this morning as the market just can't find a sell order at all, man. Pretty remarkable. All right, what else we got going on here? Let's see. Let's talk a little bit of treasury yields. Yeah, since we're talking about 3.7%, man, this story out this morning from the Journal talking about the rebound in treasury yields fueled by resilient growth and inflation. Well, that's an obvious statement, okay? As in, it's either going to be because we got inflation raging, or we got growth, or we got both. They can change that headline to 3.7% now. That was out at 5:30 a.m. It's now above 3.7, the highest since March. And yeah, you better believe everyone's watching this, man. And when they wrote this, it was only at 3.647. We're above 3.7 right now is where we're at. Yeah, and in recent yields got an extra boost by what? Corporate bond sales, hope among investors that lawmakers will reach a deal to raise the debt ceiling. What I'm always amused with is everyone's talking about, oh, market's getting a bid in terms of the debt battle. Looks like we got some progress. The market never took a hit for any of the problems in the debt ceiling. So why is it getting a huge acceleration for any relief from the debt ceiling? That's what I don't understand. Right? In terms of, it would make more sense if there was an acceleration in the market higher, because it looks like we have some headwinds. But yeah, we're catching a bid somehow on optimism over the debt ceiling, and meanwhile the market really never took a hit on it at all. Yeah, and I'd say we got rising yields, folks, coming at you. There's your chart of the 10-year, still well off the highs of where we were at the end of last year, 4.2. We were at 4% in 2023, but look how yields have risen as the market is pushing just amazing highs. Now you back it up to Apple, right? I talked about, look at this, Apple up more than $1. They're going to add $16 billion to their market cap on the open. You take a look at Apple. Apple, what, $7 off the all-time high? Even less, because we're at 176 this morning. You jump over to Microsoft shares. Microsoft, yeah, you're a solid, what, $30 off the all-time highs, but Microsoft is already back to where you were at the end of October. Okay, this is a weekly. So basically, you just missed that top last 2 months. Versus when I talked about Google, right? Ooh, Google shares, you're only back to where you were trading in May of 2021. Google shares, $30 off, but you're trading $30 off, which is a 20%. Google still 20% off of its all-time highs, versus Microsoft less than 10% off the all-time highs, versus Apple, what, 6% off all-time highs, 5% off all-time highs? Now, what is it, $6? Less than that, 4 or 5% off all-time highs. Absolutely remarkable. We jump over to Tesla shares. Tesla, up about $1 at 177 this morning. We check out some of the other equities. How about Meta shares? Accelerating higher yesterday. Montana banning TikTok, the first state to do so. I imagine that's going to become a trend going forward. Meta gives back some of it. This thing's been on quite a run, man. From $88 to $246. But be careful. 271 is that 618. But we're now well into the bar of where we were, and that was the real extreme drop-off in January from Meta shares, and it didn't stop from there, man, as this thing just kept dropping. But quite a different world we're in right now, right? We jump back to the dollar index, keep our eye on the dollar and yields as they've been so important in this market. We put it on a short-term chart. Oh, there we go, man. The dollar's catching up. We got higher yields, and we got a dollar gaining some strength yet again. We check out the 10-year. It's continuing, man. 10-year off 12 ticks. Stay tuned, folks. We're coming back for the open. Be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You opened a little bit negative on that opening bell right there. S&Ps trade down about 4 and 5 points pretty quickly. We give up. We're trading at 42.20. You're still positive across the board right now. You got the Russell technically leading the way, up by almost 0.7%. Dow up by 25 points. That's about 0.1%. NASDAQ barely in the green right now, and you got S&Ps holding steady by about 7 points. Bitcoin up by $200, 27,000. We'll call it crude. Look at that drop off, man. Crude just gave back $1 since the program began. 73.58. We're down at 72.61 right now in crude. You jump over to notes and bonds. We got lower price and higher yields. And we jump over to the gold contract. You got gold trading at 1963, and we check in on that dollar index. So important these days. The dollar index right now spiking higher at 103.34. Yeah, it's going to be an interesting Friday, man. We got Chairman Powell coming up in 90 minutes. Is he going to follow along with what's been going on? Because, boy, if he's got some strong rhetoric about the June meeting coming out, watch out for this market, man. You could say this market's priced for perfection, okay? Yeah, there's a great graphic in the den talking about the market this week. Basically, everything is awesome. No matter what happens, it's awesome. You got a voting member of the FOMC coming out saying, guess what? We're not there for – and that – Logan, okay, the woman who's the Fed president of Dallas, she said that we're not there yet to skip a meeting. She didn't say we're not there yet to pause. We're not even there yet to skip a meeting. Now, that's just a terminology reference that I'm sure she prefers using versus the word pause that the market is really interested in right now. And then you got Bullard yesterday reiterating some similar logic, saying that hikes are definitely on the table. And now you got Chairman Powell, the main event coming up today at 11 o'clock. We'll see where he goes. But this market, folks, priced for a lot of optimism is how we'll put it, okay? Priced for a lot of optimism. I mean, look where we are, folks. We're back to where we were on January 24th of 2022, right? All of that, all of those losses, the 1,000-point rip that we had in the S&Ps from 46.31 in March of 2022 to 36.39 just a few months later. Within the span of that 1,000-point rip, if you were in the market in January of 2022, you're basically flat right now. What you have given up there is that you've given up some of the opportunity cost as yields have risen through the better part of 2022. And yeah, we're still dealing with some of those lofty levels as well right now. All right, we jump to what else we got going on. And let's jump to some of the other headlines out here. And how about the NHL? NHL. What do we have? A quadruple overtime game going on last night? Palm Tree Playoffs. An all Sunbelt field for the conference shows that hockey's 30-year effort to establish roots in the South has taken hold. Well, I got a special spot here, folks, because Tampa, boy, they've put together quite a team. You got the Florida Panthers out there as well. But interesting, right? What is going on here? We got the Florida Panthers. And then we got three guys wearing Lightning jerseys. The Lightning, man. Watch out. They're everywhere. They play their games in Sunrise, Florida. But nonetheless, it's interesting, folks. And we're very fortunate in Tampa. If you're not around the Tampa area, right? Yes, we're in Florida. Yes, it feels like it's 100 degrees every single day already. I'm going to get Tommy into hockey, man. Number one, because it's an outstanding sport, folks. I encourage you to give your kids the ability to play hockey. Once they learn how to skate, man, you can be so fast on skates. That's why kids really enjoy it, right? It's a fast game. And there's no checking in younger leagues. So that's kind of a cool part of it, too. And everybody sees that all the pros lose all their teeth. Well, they only lose all their teeth, folks, because once you start playing in the pros, you don't have to wear a face guard. All the way up through college, man, you got to wear a face guard so that pucks can't smash your teeth out. Kind of makes sense, right? Once you get to the pros, you got to wear... Is it a half shield now? Do you have to wear a half shield? I think you got to wear a half shield over your eyes, probably to protect a puck going in and taking out one of your eyes. But nonetheless, it might be the preeminent, basically, franchise in Tampa. The Bucks, of course, they have quite the following. The NFL has quite a following indeed. Tom Brady coming here really brought them to the forefront. But guess what? Brady's gone. And the Lightning are here to stay. And they sell out every single night. And just the speed of the game, folks, the arena. And then you have Vinnick owning the team. And him and Bill Gates have built out that Tampa water area tremendously. But, yeah, you see the attractiveness of the game when you see how they can spread it to different parts. You got the Eastern Conference Finals featuring the Panthers and the Carolina Hurricanes out of Raleigh, North Carolina. And they won 3-2 in quadruple overtime last night. In the West, you got Dallas and Vegas. Not really marquee hockey towns, usually, right? You got the Southern Tilted Stanley Cup race is the culmination of millions of dollars and decades of work from expansion team owners and the league to grow the game from the grassroots level up. yeah, plenty of bumps along the way. Arizona Coyotes, current struggles demonstrated, so they're struggling out there. It doesn't seem like it would have been that easy, folks, but guess what? The reason why? Hockey's a great sport, man. I know we're talking a lot of basketball in there today. We got the basketball. Basketball's a worldwide sport, man. Basketball, I mean, NBA stars over in China are like gods, man. So there's a difference of appeal globally, the way NBA has been able to spread that game. But I'm telling you, all right, and I know I'm biased because I'm a Celtics fan. I'm not a Lakers fan. LeBron is quite an athlete, and what he's doing at his age especially, okay, is renowned. But, man, I saw him flop last night, and I know these are cherry-picked, but that game is such a bummer how these players turn into flop. It's turned into soccer. And, listen, I love soccer. I was out playing soccer with the kids last night. Soccer's a great sport, too. And the bummer of it is that flopping wins you games. It wins you championships. It's part of the game. But, boy, it's a bummer. I digress, but I saw LeBron flopping last night. Maybe I'll try and get the link and I'll post it. You know what? I will. I'm going to find that link. I'm going to post it in the den because it's a bummer when you see that happening, man, because it just ruins the game. It's acting, and he's supposed to be the best player out there, and he probably is to some degree. So many great players in the NBA even, as I don't know him. But it's a bummer watching him flop. And you don't see that happening in hockey, folks. You see people in hockey getting blades across the face, 75 stitches, and they're back in the game in like 5 minutes once their face has 75 stitches. Crazy. All right, let's check out some of the equities with action this morning. Morgan Stanley, they claw back all the losses on their CEO, talking about departing over the next 12 months. Foot Locker, I imagine they're not clawing back their losses. Yeah, down 23.4%. Quite the drop-off. Be careful on that equity, folks, in a big way. John Deere, different story, trading higher on their numbers, up by 3.5% as we got markets in green across the board. Let's check out, those FANG stocks on the open. Apple shares marginally higher by 0.4%. Microsoft gives it up a bit. This thing's just been on a tear nonstop. Microsoft down about 0.1%. You check out Meta shares. Yeah, I mean, Meta's been on quite a run recently, folks, but you start seeing states banning TikTok, this thing's going to take off, man, because that's their biggest competitor out there, and there's a very real, distinct threat for justifiable reasons, talked about a little bit on my show last night. Certain companies, folks, access your data. Apple, Google, Microsoft, right? The biggest FANG tech stocks out there all. That's one thing. The Chinese government, it's a little bit of a different story, in my opinion. One man's opinion, but take it for what it's worth. Markets, green, same old story. We'll see if that holds through today. Stay tuned, folks. We'll be right back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by about 11 points right now, trading at 42.22. Markets green across the board. And yeah, talking about some of the options. So what do we got? We got options expiration going on, okay? Interesting article from Bloomberg out here talking about the 0 days to expiration boom is messing with equity patterns. This article was out there yesterday. Didn't get a chance to cover it on my show. I was talking about it with my dad yesterday. And what this article talks about is that intraday volatility and muted daily moves are both linked, in this article's opinion, okay? Because people are just figuring out how this is working, folks, okay? And I encourage you to check this out because even if you're not trading them, and I'm not advising you to trade them, but you should understand how they're moving, how they work, the type of leverage they provide traders, the type of premium, decay, volatility, premium, that is built into them and how they could be impacting equity markets, okay, even if you're not trading them. And this article is a good example of that, talking about that they are reordering the way the stock market behaves. And folks, if you understand how they move, man, you can't help but realize that, of course, they might be playing into how they move because the type of margins and the type of leverage that they provide is pretty startling. And then you think about the fact that the decay that's going on a daily basis, right? And I think, and I'm still trying to understand them on a daily basis, it's never going to be something you solve, folks. So, because the moment you solve it, things change, right? And the reason why it's so cool is this is just the beginning. It's not going to be like this forever. I imagine that eventually algorithms or computers or AI will take over to some degree. But what this talks about is that just this week, you got JP Morgan arguing that the push-pull between ultra-short bets and longer-dated options may be damping the day-to-day swings in the S&P 500, which has seen moves of below 1% in all but 6 of the past 32 sessions. And then you have academic research showing that the 0 days to expiration dynamic may be more complex and less benign than that suggests. So you have people on both sides, right? That's the best part. People on both sides. You got a new study talking about that trading is actually making America's benchmark gauge more volatile on an intraday basis. The best part about this is when you can't figure out what's going on, that's when there's an opportunity, folks. There's people on both sides. Once it's a solved issue, there's not going to be that opportunity anymore, okay? Which is why the time is now to figure this stuff out. The Wall Street debate over whether uptake of the options has the potential to destabilize the $44 trillion equity landscape, okay? And I don't think it's going to destabilize it at all, folks, because what's going on is you got defined risk, and that's the coolest part of it. Now, what Wall Street's kind of figured out how to do is to provide extreme leverage to traders while making sure that they are not over-leveraged to the point that their risk is undefined and that risk could come back and hurt the brokerage that they're trading in. I've explained it in my program before, folks. We're going to be talking about more about these going forward because I think they're so important to understand, even for traders that are not in the market. But you are getting somewhere between 100 times, 200 times, 400 times leverage sometimes for what you're doing, and check out the charts, okay? 0 days to expiration, short-term expiration volume percentage, it's a rocket ship, man. And it just started over the last couple of years during the pandemic. But guess what? It really accelerated about a year ago when things took off, and they're offered. And they're offered, folks, okay, up and down the line when you're talking about the SPYs, the Qs, the indices. You check out the Qs, for instance, okay? We got the Qs trading at 337. You jump into the trade portal on the Thinkorswim platform, and what you can see is they got options expiring every single day. Now, you can be both sides of this market. You can be the market maker, which is the coolest part of this conversation when you're talking about options and how this is going to play into things. Because so often, right, what happens? Retail traders are the ones gambling. They're the ones buying out of the money calls. They're paying the premium. They have a high theta, which is decay. And when those decay, the market doesn't move enough. You lose that VIG. The market maker collects it, okay? And there you go. But you can be both sides of this because the bid-ask spreads are so small. Now, we're going to focus on today's options, okay, which are May 19th. But you don't have to do today's. Today's are the ones that are taking off. If you're day trading, okay, and you're an account that you day trade in, yeah, there's no reason to pay any extra money because all you're doing is you're eating up your leverage, right? You want to go on the ones that are today because you can buy a slightly in-the-money call, okay, for $1.37. Now, what's so cool, here we go. This is a brief example, right? Let's say you're long the Qs. Why not? The Qs never go down. I'm kidding, folks, okay? The Qs, as our man Jimmy said in the den earlier, what do they have, 27% this year, and now everybody is turning bullish like the market's never going to go down again? Be careful here, folks, okay? Let's say you're bullish, though. Let's say you say, today's not the day, man. Powell's not going to shock everybody. I'm just going to ride the wave. I'm going to ride the momentum. I'm going to look for positive action in the market this morning through today, and I'm going to make a day trade in the Qs. I think the NASDAQ 100 is going higher. The NASDAQ's the laggard today, right? It's only up by 5. You could call it basically flat. S&P's up by 10. Dow basically flat as well, I guess. Russell's up a bit. Point being, you're 50 cents in the money for a 337 call, okay? You're about 50 cents in the money right now. You have a call at $1.40. So what are you doing? You're paying about $1 of premium. And the coolest part about this, folks, is if you understand theta, theta is the amount that this option will decay on a daily basis. Now, what's cool is on 0 days to expiration options, it's very simple what the theta is. The theta is extrinsic value. And what that means is that it's the value that's usually associated with time value. Right? You either have intrinsic value, which is what you could get if you bought that option right now and it closed where it was. You got 35 cents right now. You could exercise your call at 337. You sell it at 337.45. You collect your 45 cents of intrinsic value. Well, the rest of what you're paying is premium. And so your theta is going to decay all of that today. So your extrinsic value is always going to be your theta on the 0 days to expiration options because everything goes away but the value of that option today, okay? Now, you can go both sides of that. You can say, well, geez, that's a lot. That's a whole $1 of premium for just barely one, not even a full day of trading, right? Well, the best part is, folks, this thing's ticking by 2 pennies right now. You can be the one selling that premium if you want to, but let's just say you're looking for a move, and we're talking about leverage in this market, right? And as we're talking, this is moving a little bit away, but we're still 20 cents in the money for this option. So what you're able to do, okay, is that you are able to, and for people who are making really short-term trades, boy, the leverage is fantastic because, yes, you're going to lose $1 of value over the course of the day. But guess what, folks? The day just began. That $1 is going to get lost over the course of the entire day, okay? So what? Maybe you're going to lose 10 cents of value an hour. Okay, maybe it's going to accelerate a little bit towards the end of the day, more so, right? But you're talking about a slow level of premium you're paying for a leverage of almost 300 to 1 because it's giving you the right to hold an equity ETF that's trading at 337 and you're only paying more than $1 for that. Yeah, We'll talk a little bit more about this when we get back. We'll talk a little bit about the delta as well in relation to what you're paying. Stay tuned, folks.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets pretty much sitting where they were on the open. S&P's up by 12, NASDAQ barely in the red, Dow up by 70, Russell up by 8. So to finish this conversation, right, we were looking at potentially a call on the Qs, and they talk about the SPYs in these articles mostly, but the Qs do it as well because you got daily expirations and you have bid asks that trade pretty close to a penny wide, okay? Here's the only point here, okay? You have the Qs trading at 337. You can buy a call for $1.13, and meanwhile, you're getting half of the move in an ETF that's trading at $337. So you're paying $1 for exposure to an ETF that's trading at $337, and you're going to get 50% of the movement of that ETF. So what are you getting? You're getting basically 100% of the movement of an equity that would be trading at about $170, and you're getting it for $1. So you're getting 170 times leverage. I'm ballparking numbers here, right? That's why people love them, man. Okay? And there's a plethora of articles out there. This one was from last month from Bloomberg. I would put that number way higher than $358,000 per day in terms of what's getting lost on these folks because, boy, the exposure the attractiveness and the level of volume going on in them, okay? 300,000 for everybody in the whole entire market seems like nothing when you think about the type of volatility, premium, and the kicker is you do not need a ton of money in your accounts to be trading those, man. And yeah, it's gambling, okay? Who needs Vegas? But here's the kicker, folks, and I love this article. Degenerate gambling and zero-day options thrills retail traders. Folks, everything is gambling, okay? If you think you're trading and you're not gambling, then you got to get your head checked out, man. Now, there's investing, okay? You put your money in the SPY, you're a retiree, you put your money in a 401k in a SPY, that's not gambling, okay? That's investing because over the long haul, you're going to make money. If you're trading intraday, you are gambling. Here's the kicker, though. You can have a positive expectation for return in gambling. People always associate gambling with a negative expectation because most of the time it is. You walk through a casino, be careful. Over the long haul, you're going to lose some money. But nonetheless, folks, we'll talk a little bit more about it because it is a phenomenon that's not going away. And stay tuned, folks. We got our man Jacob Shoup coming up next for Basil.